JB Cycles here. I thought we could do some analysis together on this Saturday. So I haven't really planned this, just let's try this together. Here you see the S&P going back 100 years, and in green you see the theoretical 3.5-year cycle, and in red you see a wavelet that is showing the corresponding oscillation in the market. And often you see the wavelet and the market is in phase with the theoretical cycle, and sometimes it's a bit out of sync. It's a bit here, market is a bit early. The wavelet is suggesting that the market cycle is a bit ahead of the cycle, and then it gets back in phase. And this this works over 100 years back. Actually, it works over 200 years, looking at monthly data. But I really don't know what's behind this cycle. There's something causing this cycle, and I would really like to measure what is causing this, because then maybe that would have shown why is the market early here back in the 1920s, 30s. Was the driving force different from normal? We don't know. So what we have is just we have to trust that this cycle is present, and we have to measure the market to see what is the condition right now. Is it corresponding with a theoretical cycle, or is the actual cycle a bit early or a bit late? And what we have, we cannot compare or measure the what's causing this, but we can measure with historical analogues to see, okay, what happened in a similar condition back earlier sometime. So in essence, that is what I do. I try to measure the condition and compare with history. So let's just have a quick look here, starting with Bitcoin. This is weekly data. So Bitcoin, I think Bitcoin should probably be following the same 3.5-year cycle, but when you measure Bitcoin, it looks like it has more like a 4-year cycle. But I think in the long term it will, that can happen with the 3.5-year cycle. If you measure over, let's say, 10 or 20 years, you may think, oh, it's only a 3-year cycle, and then in some other decades you may say, oh, now it looks like a 4-year cycle. But over time, on average, it's about 3.5 years long. And going back, you see this low was kind of a very early low, and then this next low was a bit later in this red part of the cycle, and then we have this low was back going out in the yellow part of the cycle. And now I think the low we are going into here will be well into the yellow part of the cycle, because this cycle is just calculated from the average up until now. And it is interesting here to using these wavelets to see how identical actually these cycles in Bitcoin are, because we have in essence here a big ABC in the bullish part, and in the next one an ABC, and you can see that by this let me see, it is the greenish wavelet here. You see the greenish up ABC, and the next one ABC, and here ABC. So that's the bullish part. And the bearish part, well, then it's the bluish wavelet, and you see this bear market was 3 waves down, 1, 2, 3, and here pretty much the same one. Well, it's a bit messy here, but in essence 1, 2, 3, and here 1, 2, 3, and I would just, my best guess is we should repeat some kind of a 1, 2, 3 going down, and I don't think quite we have reached we haven't finished this first one. just comparing with the three previous ones. And here I'm not measuring from the price high, but from the wavelet high. And well, let's just look at the average. It's suggesting, well, it's going sideways into January sometime, and then it's going down. Anyway, the low is about September, October, and that is where I expect the S&P to make a low as well. And daily data, well, we have the 17-week cycle. You know, we are in the most bearish part here. It's sometime in December. And actually, if you look at these big corrections, they tend to be, well, this leg 1, 2, 3, you know, this is a totally different time frame. So we have 1, 2, 3 and 1, 2, 3 here, and going back here, we had a 1, 2, 3 and here, and right now we have only done 1, 2. And actually, what is this 1, 2, 3? You know, it's here's the 4-week cycle is 1, 2, 3. So the very typical correction pattern in this time frame is, well, we still have 1 month left, and that's what I'm expecting from Bitcoin. You know, I said the cycle is suggesting a bounce on Thursday. Markets tried to bounce, but you know, the bigger cycles are just too bearish. But there will come a bounce here, probably next week. But it's a bounce you want to sell, because I'm looking for a low in December. Then a bigger rally, but it will be a lower shoulder, and then the downtrend continues. You know, for the S&P where I started, so measuring this current 3.5-year cycle and comparing, here I have selected some previous cycles to compare with. So we had a big correction. S&P was down about 20%, and you could ask, was that the 3.5-year cycle low? Could it be? Well, I cannot guarantee it, but I don't think so. So here are, you know, some analogues that were very short and early. We have 1960, but you know, this was a bigger and longer correction. This was a V-shaped. It was so quickly over. 1960 was a real double low, a real correction. 1982, look how long it was going sideways and slightly down. It was a long consolidating part. And 1988 also, you know, this long. So here we had a real long phase that was a corrective phase, and we never had that in this spring. It was just a V-shaped panic and all over. So I'm rather comparing with these long bull markets, and you know, most of them are turning down about now. You know, some could suggest we still have some weeks left, you know, into early winter. 1987 is also an analog, and then, you know, or could it be like the 1990s? Look, that one never corrected. It just continued up. We had the 1998 crash and continue up. So could that be repeating? It's not impossible. I don't think so, but it's not impossible. Because this other indicator, well, again, it is measuring from the wavelet top. You know, the first one I was measuring from the wavelet low. Now I'm measuring from the wavelet top, the current one. And all these analogues, they are, you know, the black average here is now turning down. It has a low around September, October. And all these analogues, they are very soon rolling over. Unless it's like the 1990s, where we just never corrected, we just continued up. So here I'm using shorter wavelets. They are suggesting we are very close to the where they should be over. We should roll over, and you know, here it's comparing with the average. It says, you know, A, or say 1 and then 2, and maybe the 3 is here in October. Here it's showing up as a higher low. But again, here you have the 1997. It never corrected before the 1998 crash. So the majority of analogues says we should start the bearish phase very soon, unless we have this